Hey everyone, this is Dave Gagnon here, Chief Marketing Officer for Integrity Square, along with Pete Moore, founder of Integrity Square, James McGinniss, the CEO, and Faye, the CMO of David Energy. We are pleased to bring you the 5 ways to keep your electric bill from skyrocketing, which James will take over from here. This is a very timely webinar because right now, I think this is day one of a heat wave here in New York City and in other parts of the country. So this couldn't be more timely. We did a webinar, I beg your pardon, a Halo Talks with James, where if you go to halotalks.com and type in James, you'll see his webinar that your Halo Talks that we've done. I'll send that out in a post email blast. At this point in time, I'm going to turn it over to James to let him introduce himself, David Energy, and you can take it from there. James, thanks for doing this.
Yeah, thanks so much, David and Pete, for having me. And as the slide says, we're going to talk about 5 really simple ways to keep your electric bill from skyrocketing. I know electricity is very complicated, so we're gonna keep it simple and just some quick wins that maybe you could do to keep things under control. Because yeah, as you said, David, it's summertime, so bills are going to be going up in the coming months. So I'm James McGinniss. I'm the CEO and one of the co-founders. I'm based in New York. I'm a sort of self-proclaimed distributed energy enthusiast, where distributed energy resources are things like battery storage, rooftop solar, electric vehicles, smart thermostats, backup generators, really any like smart electricity device, IoT device that's going in homes and buildings. And there's a huge new category where these devices are just growing like crazy all around the US. So I got very into that while I was doing a master's program in mechanical engineering at University of Texas, Austin. And sort of out of that interest in that program, I founded David Energy to help bring these resources into the grid in a smarter way. So we are a technology-enabled electricity supplier. And we have 2 product lines, one for businesses like multi-location gyms and restaurants, help manage their electricity spend through our software, and then a consumer product that is only in Texas currently, but is focused on users with electric vehicles and batteries in their homes. So I did a brief mention of what we'll cover today. But first, I'm excited to launch the partnership with Pete and Halo Talks. As David mentioned, do listen to the podcast. It was a ton of fun with Pete. So thank you guys for having us on. And yeah, the partnership is focused on helping more club owners manage their electricity costs better. But today, we're just focused on real practical advice. 5 simple ways to manage your bills, which are switching to smart thermostats, knowing what a normal bill should look like and why they may rise, what are called slamming skims, watching out for those, switching to a fixed rate, and knowing and managing your peak demand. So you may not know what any of those things are right now. That's fine. We're going to get into it. And excited to do more with the Halo Talks team here. All right. First one, very simple. Switching to smart thermostats. HVAC, especially in fitness clubs, is usually 50 or more % of your energy spend. If you think about it, gyms are just a big box that we cool and put some lights in. And so most of the energy spend is from your HVAC. And so smart thermostats is a really simple way to get some of that spend under control, because it's a big portion of the total bill. So as you see on the image on the left here, going into a lot of these spaces, we see a lot of pretty funny ways of managing thermostats. We think smart thermostats are better than what we see typically. So we see things like leave it at 80, as you see here. We see plastic boxes covering thermostats with the keys sitting on top of them so people can just get into it anyways, or locking out thermostats and club owners getting texts from their employees mad, which is a headache and not something you want to be spending your time on. And so we've seen it all as far as how to manage thermostats, and we think smart thermostats are better than all of them. The risks of old thermostats are basically just overconsumption and overspending. This can happen from things like unintentional temperature holds. And so what we'll see is an employee will crank it down to 65, not knowing they put it on a permanent hold. So we see that unit run flat out at 65 for 2 weeks until someone notices it and changes it. All day, all night, that's going to lead to unnecessary stress on the HVAC unit and costs. And so best practices, definitely set schedules during operating and non-operating hours, basically just around your business hours, and control who has override access, where that latter piece we know can actually be pretty tricky to actually manage as we see in that image on the left. But that's about it. It's pretty simple. And, that's going to drive alone could lower your consumption by 5-10%. Okay. Knowing what a normal bill looks like, the reason this is super intuitive. It just means looking at your bill every month and getting a sense for how much it is. Sometimes when we ask club owners, what do you spend per month? They don't know the answer. Sometimes they do. It's good to know the answer because basically you'll develop a sense what is abnormal if you're looking at this often, and you just kind of use your intuition. So believe it or not, utilities are giant companies with tons of processes. Mistakes happen all the time on the bill. They're just wrong, basically. They overcharge you. Scams can exist too, which we'll go into. And so it's actually wild, living in the 21st century, how just a simple bill can often be very wrong. And so the risks of ignoring this are sort of rate spikes that happen due to being in the wrong rate class. You're even being billed for the wrong volume. The meter itself could be wrong, or maybe you're even paying for a neighbor. We see that all the time, and or slamming, which we'll get into. And so we'll get into some best practices. But first, actually, a recent example, Blank Street. It's not a gym, it's a coffee shop. The utility had overcharged them $120,000 just for putting them in the wrong rate class over a few month period for like 25, 30 coffee shops in New York. So these are very real. These errors happen all the time. And just by looking at your bill, you're going to get a sense of what's normal. So be aware of seasonality as part of that. Obviously, as you mentioned on the call, David, summertime means more HVAC, more usage. Your bills are going to go up as a function of using more power. But always, if you're concerned, contact your utility ASAP. If you notice anything suspicious, like a bill doubling out of the blue, that shouldn't happen. There'll be incremental increases, but anything totally out of the norm, you'll pick up pretty quickly. So slamming scams. I didn't know a ton about this until I got deeper into the power space. But slamming is the illegal practice of switching electricity suppliers without your consent. When you get slammed, you end up overpaying for electricity. So we see things like 10 cents per kilowatt hour is a normal price to pay for power, say in New York City in certain months. We see people paying 30 cents or 40 cents even to scammy suppliers. So 3-4 times what you should be paying for energy. That'd be like paying $12 a gallon for gas instead of $3 a gallon. So it's going to lead to, especially in the summer, you overpaying for bills. So this is often changed and isn't noticed until months later. Again, if you're not looking at your bill and noticing these changes frequently, you won't pick up on it. And there can even be early termination fees. If you then cancel this contract, they'll come after you and they'll charge you a ton or try to collect on that cancellation. And so the way this actually happens, we'll give you an example of a quick serve restaurant customer of ours. We were monitoring 6 locations. One was on an agreement with us. After we reviewed their bills, we found that 5 of them had abnormally high rates, like 40% higher than they should be. 2 of these were slammed. 3 of them we're still digging into. And the way slamming actually happens is can either happen in person or over the phone. So basically someone walks into a location, says, hey, I have to check your meter. I need the numbers. They make up some bogus story and they get like a manager, a GM to sign a slip with the account number, and then they enroll you. and they charge you whatever they want. This can also happen over the phone, which is a little trickier to do. So some best practices, be wary of anyone asking for utility account info in person or over the phone. Get everything in writing, and contact your existing electricity supplier, whether that's a third party like David Energy or the utility, if you're asked to verify an account change, or if you see your rate changed at all on the bill. That could be a result of having been slammed. This happens with a shockingly high number of times. Like we see this in, honestly, I don't know, Faye maybe can chime in, but like I feel like 20 to 30% of accounts will see some level of activity like this in New York City region. It's very, very common. And even customers that we have, all of a sudden they're not a customer anymore. We say, what happened? They got slammed. So this is very, very common. Switching to a fixed rate. So we're getting a little more complex as we go through the presentation here. A fixed rate offers better predictability for your bottom line. So what a fixed rate actually is, going back to that gas analogy, if you don't like gas going from $3 a gallon to $6 a gallon or $4 a gallon, you would agree with your gas station to pay, say, $4 a gallon fixed for the next 2 years. So for the whole term of the contract, you're paying the same rate. And the only thing you're then paying in addition to that is how much you're driving or how much electricity you're consuming in this case. So the risks of not having a fixed rate is your bill is exposed to market trends. So like one thing we saw in COVID, coming out of COVID, energy markets changed dramatically as people started coming out of lockdown. And so rates across the country were like doubling or even tripling in some cases. If you were under a fixed contract, you wouldn't have been exposed to that. Or something we're seeing right now, if you're an owner in New Jersey, I think rates are hiking by like 10% or something July 1st. I may be getting that totally wrong, but it's considerable and it's happening in New Jersey imminently. So best practices, check if you're in a deregulated energy market. This is most of the Northeast and Mid-Atlantic and Texas. The Southeast and Midwest is more regulated territory. You can evaluate different retail electricity providers that offer fixed rates. One thing to note is utilities do not do this. So what retailers will do, they'll look at your usage, they'll come up with a price, they'll offer you that price. Con Ed, for example, in New York City, does not have like a team of traders looking at that for you. This is really only with retail electricity providers who are giving these like custom products to customers. And so retailers give you flexibility around rates and terms that the utility cannot. Utility just puts you on an index, which means if the price of power goes up, you're gonna pay for that. So some, like us, will offer other services like enrollment and incentive programs or tools for reducing usage or even alerts about when a price becomes available. So if you're looking for a retailer, ask lots of questions before signing. A good retailer will answer them and look for other add-on features aside from just that base layer fixed rate contract, because some of them do offer other incremental services aside from just the rate. So knowing and managing your peak demand, this is one of the more complicated, things to know about. But basically, it's what you pay for delivering power, like all the poles and wires that the utility needs to build to actually get power to your location. The way they charge you for that is basically the peak draw you have from the grid in a given month. So in New York, it's the 30-minute interval that is your highest demand at any moment. So it's like all your lights are on, your HVAC is pumping, it's the hottest day of year. Just that peak 30 minutes you're going to get charged for when you're using the most electricity. So you can think of consumption and supply, like the number of miles you would drive in a given on a car trip. And then your peak demand is like the fastest you drive at any moment in time. You're going to get a speeding ticket for that. And so you can have just from that one 30-minute moment in a whole month, see your bill raise considerably. So some best practices here are stagger when your sort of equipment times, start times are. So we see an employee comes in, they flip everything on in the morning, and you get a big spike. Whereas if you just stagger things out, you can operationally you can lower that peak demand. Shift use of large appliances to unoccupied hours. So your most energy intensive things, depending on what you have in your clubs, try to do them not like during the day when everything else is running. There are things that utilities offer, like demand response programs, where you can actually get paid to lower your usage during these peak times because it's a huge help for the grid. And then ensure your HVAC units are at peak efficiency. So whether it's the unit you have yourself, it's like a super old unit, it's going to be more inefficient and peaky. Or if you have those smart thermostats in place, that's going to lower your peak demand as well as how much power you're consuming just by having the right operating schedule and making sure that you're not overworking that unit. There's a ton more there, but those are just some simple, like actually actionable things that you can do, in your clubs today. So I know we're zipping through here, but just to restate, the simple things you can do: switch to smart thermostats, pay attention to your bill, watch out for slamming, consider a fixed rate. That can be very beneficial, and know and manage your peak demand if you can. And so with that, I will leave it to some Q&A. I know we don't have too many folks on the screen right now. On the Zoom, maybe they'll be there in the rewatch. So, but just thought I'd offer up any chance for questions.
Yeah, this is Pete. Just a quick question on how do you guys get involved when this wants to be outsourced to another provider, and what's the onboarding process?
Do you mean if a customer wants to get a fixed rate from us, or
yes.
Do you mean? Gotcha. So what we'll do, again, is why we went over this. We will ask for account info. We like to think we're a trusted source, unlike others, but be careful who you're giving that out to. So we use that to pull usage from the utility. We'll look at your historical energy consumption, and then we'll look at the energy market, and we'll basically price a contract based on the price of energy and your expected usage, and then offer that in the sale. Obviously with us, we are coming back and saying, hey, does this price look good to you? Here's what your last 12 months look like, et cetera, giving some advising there before you ultimately determine to sign with us. Then we would enroll you. It's totally seamless. You don't lose power or anything. You just get a new rate on your bill based on the start date in the contract. And so whether that's us or any other third party, that should be the process you expect. If you hand out your account info and you don't hear back, or you're signing a contract day one before seeing a price, don't do that. Definitely make sure you're looking at a price before you're actually committing to signing with a retailer. But from there, the onboarding is super simple. It's like behind the scenes, you don't notice a thing until you get a bill at your start date on that contract. Any other questions there?
Hey, did you have something you wanted to potentially add or ask?
Yeah. One of the questions that we get a lot just from our customers, and I figure this is good to share, is what is the difference between the utility and a retail electricity provider?
Absolutely.
Yeah, so I didn't explain this super well while talking about it. So wherever you are, the utility owns the poles and wires. They have a monopoly on building that infrastructure. They're the only company that's going to deliver power to you. So you pay, your bill has two big sections: delivery and supply. Delivery is what we talked about with peak demand. You're paying the utility to deliver the power on the wires. Supply is where you have a lot more choice. So in 20 states, the utility is obligated to let other third parties offer rates to customers. So if you sign up for that, you by default in most states, except for Texas, will be on the utility supply rate, which is typically indexed, meaning it's going to change every single month. And you're exposed to any market changes. If you go to retailers, that's where you can get a fixed price and enroll with them. So then half your bill is going to be like supplied to a third party now, where they're effectively like shipping the power, their power on wires that are owned by the utility. So utilities always deliver. They're the default supplier, but then you can get a third party supplier that offers more attractive rates than the utility does.
Yeah, I certainly didn't know that when we first started talking either, James. So thank you for bringing that up. I actually, Pete, if you're still with us, this I think is going to be a good point to bring up, especially during the replay. There was a mention of the line item here as a very important function of potentially selling a club. So the HVAC bill affecting the multiple of the club if they choose to pursue a sale. You did mention that in your conversation with James during the Halo talks. Maybe you can talk about that for a quick minute or two.
Yeah, sure. Just simple math for the guys on the call here and anybody listening. You know, if you're going to sell your club and you're a large format box and you are going to sell, let's say, for 5 times or 6 times cash flow, and you can save $50,000 on your electricity and utilities and so on and so forth related to how you manage your locations, take a 5 or 6 times multiple on that amount, and that becomes, you know, real dollars. So when you're looking at savings and you're looking at a potential exit sometime down the road, not only is it going to be money to your bottom line annually, but you're going to get a multiple of that on a sale. So this is pretty serious on anything you can do. That's a fixed cost that now can turn into a variable to a fixed to your benefit. So focus on this because it matters.
Yeah, that's a great point, Pete. So I won't mention names on this, although we have some case studies on our website, but 2 example customers, we saved one of them $11,000 in our first year across 2 locations just on sort of helping them optimize thermostats and enrolling in demand response programs. So to your point, Pete, multiply that by 5 or 6 if you're then selling those locations. This owner actually then went on to buy 2 more and enroll us in those. So it can go both ways, where you're buying something and then lowering the usage and getting more sort of operating value out of that. And another one, we saved, $69,000 across 9 locations. And so by doing the same thing. So it varies depending on your usage, size of the space, how many locations, et cetera. Like if you have a big space or a small space, the dollar amounts will differ, but typically we're in the like 5 to 10%, on the total bill across the portfolio or any location that we're enrolling on is what would be like a great outcome if we could do that.
Fantastic. Unless there was anything else, we're at exactly, looks like 2:27 here. So we are right on time, which I love. Be sure to check out davidenergy.com/for-business at the bottom of the screen here. James, thank you for putting up your email address. And unless there's anything else, this will be available for a replay, which you'll have to put your name and email address to view. Was there anything else on your guys' side, James?
No, just that even if it's just to consult on, send us some bills, we take a look and let you know what we're seeing. We're always happy to do that. We're active in the Northeast and Texas and expanding from there. So if you're in those regions, definitely give us a ring. If you're not, we'd still love to talk to you. And because we are always expanding through the Mid-Atlantic and beyond. And so, we'd still love to talk to you about future, our plans for future states.
Awesome. All right. Thanks to everyone who dialed in here. Thanks to those of you who will listen to the replay. Appreciate your time, James and Faye, and we'll get this up as soon as possible.
Thank you so much.
Okay. Thanks, everyone.
Thank you.
All right. Take care.
Bye.
Bye-bye.